Today on Fear and Greed, after 3.5 years, inflation falls back under 3%, but don't expect a rate cut. Woolworths downgrades its profit outlook on the back of too many discounts, and superannuation funds spend $400 million of members' money on marketing expenses. Plus, plenty going on in markets and the US election. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Thursday, the 31st of October, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Happy Halloween, Michael.
Oh, it is indeed. I'm very excited. I'll share with you a picture of my pumpkin carving, Sean.
Ooh, excellent.
I'm very quite proud of it. And look at this. Still got all my fingers. The main story this morning, Sean, after 3.5 years, headline inflation has fallen back into the Reserve Bank's preferred target range of 2 to 3%. That is good news, though we shouldn't expect any interest rate cuts anytime soon, right?
No, we shouldn't. The headline inflation rate came in at 2.8% for the year to the end of September. For the September quarter, it was just 0.2%, according to the Australian Bureau of Statistics. Why was it so low? Because of those $75 a quarter energy rebates the government has given us. If you look beyond those and you looked at the underlying rate, which takes out all these volatile items, and the one that the Reserve Bank likes to look at is called the trimmed mean rate, that was 3.5%, still above that 2 to 3% target range of the Reserve Bank. Right on expectations for the quarter, it was 0.8%. Good news, the trimmed mean measure has fallen from 4% in the 12 months to the end of June to 3.5% to the end of September. The monthly reading for September came in at 3.2%. That's for the year to September. Now, the monthly readings aren't as comprehensive as the quarterly readings, but I suppose what you can take from that is the fact that the trend was still going down at the end of that quarter, at the end of that 3 months. The bad news, services inflation rose by 4.6%. It actually jumped from 4.5 to 4.6%. Services inflation is a real problem for the economy. Goods inflation was just 1.4%. Now, that also reflected that energy rebate. But goods inflation hasn't been a problem really at any point this year. It's services inflation, which is very heavily reliant on insurance premiums, in this case, housing costs and wages. It just takes longer for services inflation to come down. The results all in all were pretty good, a touch lower than the Reserve Bank has forecast. Jim Chalmers, the Treasurer, said the economy is on track for a soft landing. I think there are a bunch of economists this morning who are probably pretty happy with that outcome.
I would suspect so. And speaking of the Reserve Bank, as you say, that if this was a touch lower than what they had forecast, what do they do now? What's the next move for the RBA?
Well, they get together on Monday, Tuesday next week, have scones, talk about the economy, but very, very unlikely to do anything on interest rates. They also meet in the middle of December. Not really much extra information between now and then that's likely to tip them over the edge to start thinking about cutting rates. February next year, well, that's the next meeting. There will be December quarter inflation figures by that point, so maybe we can be hopeful then. What they're facing, the Reserve Bank is looking at a tight labour market, low productivity growth and strong government spending, particularly from the different states. That is all working to keep inflation high. However, the underlying trend on inflation is down. Michael, the trend is your friend. I know it's your favourite economic saying. It's not, but it's my favourite economic saying. The trend is your friend. So in this sense, that's a good thing. Probably there's enough there for the Reserve Bank to just get a little bit more confident that the next move in interest rates will be down. Now, only in the last couple of weeks, Deputy Governor Andrew Hauser said he doesn't know what the next move in interest rates will be, up or down. I reckon the figures yesterday will be enough for them to say, we've just got a bit of an inkling that the next move will be down. That's probably the best we can expect from the bank next week.
I do love that saying, the trend is your friend. And here, it does seem that the trend is quite clear, right? There's no chance really of the RBA kind of being a little bit more proactive and preempting it actually getting there.
It's always a chance, Michael, always a chance, but market economists don't reckon it'll happen.
Okay, all right. Well, don't listen to me then. Listen to the market economists. Sean, Woolworths share price fell 6% yesterday after the supermarket leader lowered its profit forecast for the current half year because it needed to put on more promotions to bring shoppers into its stores.
Oh, the irony.
Yes.
Woolies said prices had fallen 0.3% over the September quarter. If you take out fruit, veg and tobacco, it was down about 1.8%. Meat, pantry and freezer items have fallen. Most customers, not most customers, that's not true. More customers are certainly buying cheaper home brands. Now, the new Chief Executive Officer, Amanda Bardwell, said customers are feeling the cost of living pinch. She also talked about e-commerce doing well, but the funny thing about e-commerce, you think in most industries e-commerce makes things cheaper. It's actually less profitable for Woolies because people have to go and get the stuff off the shelves and they've got to deliver it and all that. Also, Woolies has got its own cost pressures in terms of labour, rent and energy. This is all Woolies' side of the argument, of course. Now, there's plenty of political scrutiny over whether discounting has been real. Woolies certainly says it has. Its issue is that the economic slowdown is biting, and it's saying that actually prices across the board, on average, are falling. I'm sure we will hear much more about this. News also sent Coles' share price down 2.4%.
All right, Sean, we have quite a bit to cover today. It is a relatively big Thursday. We'll be back in a moment with the rest of the day's business news. Sean, superannuation funds spent more than $400 million, that's members' retirement savings, on marketing and sponsorships in the 2023 financial year. That is a big sum.
Huge sum. The big super funds also gave $14 million to unions, including nearly $4 million to the CFMEU. Most of that $400 million, $300 million worth of it, was from the 10 biggest funds. Aussie Super, for example, spent $60 million in marketing. That was the highest. $43 million of that was on advertising. Most of the rest of it was on direct member communication. The Australian Retirement Trust, $42 million in marketing, including $11 million in sponsorships. Sponsorships is a tricky one. Now, Host Plus, it spent $12 million in sponsorships. It was the biggest. It sponsors the Richmond Tigers in the AFL, the South Sydney Rabbitohs in the NRL. This is all according to APRA, the regulator, as reported in The Australian. APRA is cracking down on inappropriate super fund spending. APRA wants to make sure that the spending is in the best interests of members. Is sports sponsorship in the best interests of members? Now, I'm a South Sydney Rabbitoh fan, so good on Host Plus, but really? Not so sure. Super funds, for their part, they say marketing helps effective communications with their members, and there is certainly some truth in that. But $400 million in 1 year? A lot of money.
It is. It's a lot of money. The local share market, Sean, fell nearly 1% yesterday with a few big stocks tumbling.
We've already spoken about Woolies and Coles. Wesfarmers was down 2.5%. Of course, they own Bunnings. Those inflation figures hit the banks, but really there was widespread selling. 75% of stocks ended lower. Yesterday, among large caps, Fortescue Metals Group, Telstra, Transurban and CSL were all down on more than 1%. Probably the best of the large caps was Goodman Group. Bits and pieces around. Liontown Resources announced progress in its lithium project, but its share price fell 4.5%. Bega Group, it said that it won't be able to increase prices on its products this financial year. It'll have to find cost savings, sending its share price lower. And Appen's share price rose more than 1% after the enterprise software group said the bottom line had returned to profit in the September quarter.
Hey, Sean, a very quick mention of I love that. Hey, Sean. It just sounds so casual, doesn't it? Hey, Sean, just a quick mention of the Property Pendulum, which is the podcast coming up straight after this episode is finished. The Property Pendulum, obviously brought to you by Fear and Greed and Domain. We take a really close look this week at the September quarter house price report that was released this week, but with one goal, and we're talking to Nicola Powell from Domain about it, is answering the question, is now the time to buy? Because we are suddenly seeing, yes, house prices hitting records in a number of cities, but more supply coming on the market and really some of that pressure coming off quite dramatically in certain cities. So that episode is coming up after the show, so stick around for that one. BHP, Sean. Hey, Sean, BHP. Sorry, I've started a habit now. BHP held its annual general meeting in Brisbane yesterday, and Chair Ken McKenzie said the world was increasingly volatile.
Yes, he said protectionism is threatening global trade. He's confident, though, that the strategy of BHP of reshaping its portfolio towards copper and potash is a good one. BHP itself is feeling the impact of inflation. It's feeling the impact of the uneven recovery in China and also supply-side surpluses in some commodities, think nickel and lithium. Mr. McKenzie also warned of more industrial disputes because of new federal workplace laws. Investors liked what they heard yesterday from Mr. McKenzie. It was one of the few large caps to actually close higher in share price terms.
Afterpay co-founder Anthony Eisen is leaving Block. Sean, the company that bought Afterpay in a record $39 billion deal 3 years ago.
It was the biggest M&A deal in Australia's history, made Eisen and co-founder Nick Molnar very, very rich. Eisen has worked for Block ever since the deal in August 2021, more than 3 years ago now. They're pretty much the fathers of buy now, pay later in Australia, and really buy now, pay later is almost an Australian invention. It's a reboot of lay-by. It allows for 4 payments. It kind of suited millennials, really. It suited the technology of the time, and I think it's part of the payments landscape nowadays. Anyway, made Anthony Eisen and Nick Molnar very rich. He's on the rich list, Anthony Eisen, worth about $1.4 billion. I'd quit work too.
Yeah, me too. I'd go and live on a yacht.
Mm-hmm. Yeah,
maybe.
A long time.
Yeah, very, very long time. A couple of critical minerals miners downgraded their production outlook yesterday, Sean, sending their share prices in opposite directions.
Yes, so Pilbara Minerals will mothball one of its lithium processing plants in Western Australia and will cut output from its flagship mine as it tries to weather the storm in lithium prices. Prices during the September quarter were 19% lower than the June quarter for Pilbara, and that's after lithium prices have previously fallen sharply. Its share price, though, rose 2% on the news. Meanwhile, Lynas said it will cut production of rare earths basically on the back of the slowdown in demand for electric vehicles. Lynas is the largest non-Chinese rare earths producer. Its production last quarter was down 25% on a year earlier. Its share price finished down 2%.
Star Entertainment posted an 18% drop in revenue for the September quarter as some of the restrictions on the gaming group start to bite. Probably unsurprising, right?
I think so. Star actually lost money last quarter. Its share price, well, it finished down 4%, but at one point it was down 10% yesterday. Basically, the operating performance is deteriorating. The reasons given: challenging operating environment, continued implementation of mandatory carded play and cash limits. Yeah, those restrictions are starting to hurt.
Finally, Sean, ABC will undertake a cultural renewal in coming months on the back of falling TV and radio audiences.
Yes, the news came in the forward of the ABC's annual report, which was released on Tuesday night. Kim Williams, the chair, said, and I quote, "My board colleagues believe it is imperative to aim over the course of the next few months to develop an invigorated sense of purpose for contemporary relevance at the ABC." Corporate speak at its finest, Michael.
Really, you know what Kim Williams could do is pop that into ChatGPT.
Yeah.
And just say, summarize this in 2 words.
Make it
cultural renewal. Yeah, there we go.
Yes.
International news time now, Sean. Democratic vice presidential candidate. Well, she's the current vice president. She's the new potential president, right?
True, yes.
Kamala Harris has given what observers are calling her closing argument ahead of Tuesday's election. And the thing is, the polls are still showing no clear favourite. This thing is close.
Sure is. Her speech over the past 24 hours was the equivalent of Donald Trump's speech at Madison Square Garden over the weekend. She attacked Donald Trump as unstable, obsessed with revenge, and out for unchecked power. And I quote, "America, we know what Donald Trump has in mind: more chaos, more division, and policies that help those at the very top and hurt everyone else." But she also made it pitch to be the candidate of national unity, as she pledged to be a president for all Americans and to always put country above party and self. Harris delivered her address in Washington, D.C., with the White House illuminated behind her. She stood on the ellipse, which was the site of Trump's January 6, 2021 speech, in which he called his supporters to fight like hell hours before they stormed the US Capitol. A lot of symbolism there.
This is another big story here, Sean. Ukraine and Russia are in early talks about halting strikes on each other's energy infrastructure. That's significant.
Definitely. The Financial Times is reporting that Kyiv wants to resume Qatar-mediated negotiations that were derailed by Ukraine's invasion of Kursk a couple of months ago. Any agreement would certainly signify a significant de-escalation since the start of the war in early 2022. President Volodymyr Zelensky has previously said a deal to protect energy facilities could be a precursor to broader peace talks. Let's hope that steps continue to be taken and things move forward.
There's a bit going on just quickly in international markets, including a bit of activity in the Aussie dollar, Sean.
Yeah, trading under 65.5 US cents. It looks like it will have the biggest monthly drop this month, finishes at the end of the day, since 2022. Gold is soaring on the Trump trade. The Trump trade, a lot of that around at the moment. It's a safe haven asset. So people think, well, we might put a little bit of money in that just in case. It hit a new record yesterday of more than $22.75 US dollars an ounce. Bitcoin's also jumping. That's another Trump trade. It's around $73,600 US dollars an ounce. That's only a couple of $100 below its record. Oil prices, though, have extended losses. Now, if you wonder why petrol prices have jumped near you in the last day or two, which I have, there's generally a 2 or 3 week lag between what happens in oil markets and the Aussie dollar and what we see at the petrol bowser. That's why that's happened. And earnings season in the US continues. The big one recently, or in recent days, has been Google owner Alphabet. It reported better than expected September quarter earnings, helped by its cloud computing business.
You know how it's Halloween, Sean?
Hmm.
Do you know which country exports the most pumpkins?
Exports the most pumpkins. Mexico.
No, what? Wow. Oh my gosh. Like, it is not right, but it is very, very close. That is number 2 on the list. How did you know that?
Well, I figured the US would want more pumpkins than anyone else at Halloween, and Mexico is a big agricultural producer.
Oh my God, you are like, it's like you are the human equivalent of ChatGPT. Like,
Common
just
sense.
the logic. Yeah.
So what is? But I was wrong.
You were wrong. Number 5 is the United States.
Right.
Interesting. I mean, they wouldn't export it. You would think they would keep it all for themselves to carve. But anyway, the Netherlands is number 4.
Wow.
Turkey is number 3. And there's a massive, massive gap between number 2 and number 3. Mexico is quite a big exporter of pumpkins. But number 1 on the list of the most pumpkins exported, Spain.
There you go.
There you
Spanish.
go. Oh, golly. I'm just still amazed that you managed to work out Mexico. That is really quite something. Anyway, also quite something is the Property Pendulum, brought to you by Fear and Greed and Domain, which is coming up next in the Fear and Greed playlist on your podcast platform. Thank you very much, Sean.
Thank you, Michael.
It's Thursday, the 31st of October, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.